In today's video, we're going to take a look at what the housing market is doing going into 2025 for Cedar City, Utah and St. George, Utah. My name is Elizabeth Prisbrey. I'm a Stratum Real Estate Group. If you are looking to buy or sell here in Southern Utah, I would love to help you out with that. Please feel free to call, text, or email anytime. Now, I went ahead and jumped into some slides to give you a visual of what we are looking at. We are actually looking at the month of December year over year for both Cedar City and St. George. Today is January 1st, 2025. So this will give you a full picture of what our current markets look like going into 2025. I went ahead and pulled the last 10 years so that you can see how the month of December compares year over year, and that will help us as we look to see what the future holds for 2025 in Cedar City and St. George. Now, I went ahead and pulled up the median sales price here first because that is what most people are interested in when it comes to these markets. Now, keep in mind, median means that half of the homes are selling for less than this, half of the homes are selling for more than this. This is right in the middle. It is not an average. I have St. George here in green. I have Cedar City here in blue. You'll notice that the two markets are quite a bit different, usually about $100,000 difference between the two, even though they are only about 45 minutes apart in driving distance. St. George has a much higher population, around 108,000 people. Cedar City is a little closer to 40,000 people as far as the population goes. Also, Cedar City is considered a high desert, so Cedar City will have 4 mild seasons. You will see some light snow in the wintertime. St. George is more of a low desert. It will get pretty hot in the summertime. Just to give you an idea of how these two markets compare, however, they are very, very close to one another, so it's good to take a look at both of them and see which one is the right fit for you. Now, currently, to end out 2024, we have St. George sitting right around $500,000 as a median sales price. We have Cedar City right around $389,000 as a median sales price. You'll notice both of these markets have gone up quite a bit in the last 10 years. We had a dip in the median sales price in December from 2021 to 2022 for Cedar City. However, it has continued to appreciate since then. St. George had some stabilizing from 21 to 23, but you can see we had a decent amount of appreciation over the last year for the month of December. Now, I also want to show you what these look like month to month. Most of the time in real estate, you want to compare year over year because we do have a seasonal market, meaning that we don't typically sell as many homes when it comes to this winter or holiday season as people are enjoying Thanksgiving, Christmas, New Year's. There's kind of a stagnant time where people take a break, and then as we get into the new year, things start to pick up again. Now, we already know that the median sales price went up from last year to this year in December, but what I'd like you to notice is what it did in November. That median sales price dropped from November to December, but then it went up in January. In Cedar City last year, we had a slight increase, pretty much the same from November to December last year, and then that median sales price went up from December to January. Notice this year, from November to December, we had a slight decrease in the median sales price. Same thing, St. George, slight decrease in the median sales price from November to December. Not quite as extreme as last year, however, both of these markets went up considerably in January, so that's a good indicator of what we will likely see happen going into 2025. Now, before we look at the days on market and the monthly supply of housing, I want to break down these two markets and where they currently sit. For Cedar City, we have new in blue, active in red, pending in purple, and sold in green. New listings are going to be all of those homes that came to the market in the month of December. Active is going to be all the homes that are currently on the market, not in contract, haven't sold. You'll notice that the active is much higher than the new because it is pulling over homes that were listed maybe in November, December, September, even in August. Some of them will sit on the market quite a long time if it's in a niche market or if it's priced too high. Really will depend on that particular home. What I want to draw your attention to is that our new listings went down from 2023 to 2024 in the month of December. However, our active listings are up quite a bit from last year. That tells us that homes are sitting on the market longer, meaning we are starting to get a more saturated market, more inventory, more options for our buyers. I also want you to notice that our closed sales went down from last year to this year for the month of December. However, our pending sales went up quite a bit. So although our closed sales went down quite a bit, it's likely that we will see more closed sales in the month of January because our pending sales went up considerably. Overall, though, it's important to note that our active listings are pretty comparable to where they were prior to 2019. Yes, we had some fluctuation in here, but really between about 220 to 240 is where those active listings were sitting prior to the pandemic. This will help us as we try to figure out where our market is going in the future. Same thing with our closed sales for the month of December, pretty close to where it was in 2018, 2016. We had that go a little bit higher in 2017 and 2019, but I want to make sure that we're comparing these to similar years because that will give us an idea of where things are going in the future. Now let's break down St. George. It's going to be the same: new in blue, active in red, pending in purple, and sold in green. You'll notice that our active listings are higher than they have been since 2016, pretty close to where they were in 2016, which is similar to what Cedar City was. Now, if you take a look down at our new, sold, and pending listings for St. George, they all went up about the same amount from 23 to 24. Again, that tells us that properties are moving, they are turning over. As those new listings came to the market, they went in contract, they sold, and they kept moving. Overall, though, our new and pending sales are pretty comparable to where they were in 2018, 2017, 2016 for St. George. However, you'll notice that our closed sales are lower than they were in 2016, 2017, 2018, which is pushing that inventory up. However, it is higher than it was for the last 2 years, so that tells me that we could be climbing upwards. Now, I wanted to give you an overview of these two markets before we go to our days on market. Days on market is how long a home has been listed and active on the market before it goes into contract. Again, St. George is in green and Cedar City is in blue. We're actually seeing quite a bit of spike difference in both of these two markets from last year. St. George was right around 41 days on market in 2023 for the month of December. Now it's clear up to 57 days on market. Remember, that's median, so half those homes sold for less time than that. The other half of those homes sold for more time than that. So right now, homes are sitting on the market for almost 2 months in St. George before they're going into contract. On the flip side, Cedar City homes were sitting on the market for about 49 days in December last year, where this year we're closer to about 38. So the days on market has actually gone down in Cedar City recently. Overall, you can see that the homes in St. George are sitting on the market longer than they have for at least the last 10 years. Cedar City is down, of course, from the last 2 years, and it's pretty comparable to where it was in 2018, 2017, actually lower than those. So really a pretty stable amount of time right now. Now, our absorption rate is our monthly supply of inventory. What this tells us is that if no new homes are added to the market, all conditions were the same, it would take us this many months to sell all of the current inventory. For St. George, we're right around a 4-month supply ending out the year of 2024. For Cedar City, we're right around a 3.5-month supply. Now, it's important to note nationally, what this means is that we are still technically considered in a seller's market. Really, from 5 to 7 months is considered a balanced market. Anything from 7 to 13 months is considered a buyer's market. Since we are still within the 3 to 4 month range, we're technically considered a seller's market. What I'm finding in these markets is that it does actually feel pretty balanced right now, even though that doesn't compare to what is nationally said. However, it's important to note that that might not always be the case. Right now, it's seasonal. We're in a slower period as far as the housing market goes. So of course, it's going to feel a little bit more balanced for buyers and sellers that are in the market. Now, comparatively to how we've looked over the last 10 years, St. George hasn't had this much as far as a month supply goes since 2015. That was the only time we had more in the month of December. Cedar City is looking pretty close to 2019, within 2018 and 2017, right within the 3 to 3.5 month supply. Now, again, I want to take you back to what the median sales price looks like for these two areas and how it has looked year over year. So you can see both of these markets have appreciated with the exception of 2021 to 2022 for Cedar City. Now, I always like to go over a few questions that people tend to ask when they are looking at buying or selling a home. The biggest one of recent years is the market going to crash? There are a few things to think about when considering if the market is going to crash. However, the largest one is going to be home equity. You'll notice that back in 2008, 2009, 2010, 2011, when we saw that housing bubble and we saw the market plummet, that's because this green line here, which is total homeowner equity, went below what the home mortgage debt was. So we have home mortgage debt in yellow, we have total homeowner equity equity in green. That homeowner equity went below that mortgage debt, which is why we saw so many foreclosures. If we take a look at where it is now, this slide's actually from the beginning of 2024. However, seeing what our appreciation has done, it's still a good indicator of where that home equity is. You can see there's quite a large difference between the home mortgage debt and the homeowner equity. Not to mention, lending regulations are a lot more strict now than they were then. So as long as we're seeing this large difference, the chances of a housing market crash are a lot less than people actually think. And just to kind of show you as far as that goes in US foreclosures, back here in 2008, 2009, 2010, you can see where the US foreclosure starts were. Of course, those are really pretty low between 2020 and 2022 when we had a foreclosure moratorium. We have seen more foreclosures in the last couple of years. However, you'll notice that these are all still lower than they were in 2020, 2019, 2018. That's because people have so much equity in their homes. We saw those home prices go up quite a bit. Now, I know I've read this quote before. This is from Lawrence Yun. He's the chief economist with the National Association of Realtors. He says, even with the rapid price appreciation over the last few years, the likelihood of a market crash is minimal. Distressed property sales and the number of people defaulting on mortgage payments are both at historic lows. So we really need to take into consideration those two parts. Now that just kind of tells us whether or not we can expect a housing market crash, because there are a lot of people that keep saying, oh, I'll just wait till it pops, or I'll just wait till it goes down. There's a lot that has to happen before anything like that can take place. So if you are considering purchasing, it's good to watch where home prices have been, where they currently are, and where they might be heading. Now, there have been some home price forecasts for 2025 from some reputable sources. This is, of course, nationally. They range everywhere from negative 0.4% in appreciation, so that would actually be depreciation, all the way up to 5.5% in appreciation, with an average of 3.1% appreciation nationally. If we take a look at that and compare it to our two markets, given what we know about where the markets are currently sitting as far as that absorption rate goes, days on market, active listings, pending, sold, how those compare to the last 10 years, and looking at our median sales price here, I would say we're sitting right around where the national average is. We will likely still see appreciation in the median sales price in these two markets. Again, that's based on the data and the stats that we have here over the last 10 years. No one has a crystal ball. We'll see what happens. And then, of course, we always want to check out where mortgage rates are, where they're headed, and what we can expect. Now, if you've been watching these monthly, we know that the mortgage interest rates are indirectly affected by the federal funds rate. A lot of the time we see that federal funds rate move based on where our inflation rate is. Now, you can see here, and this is always about a month behind, so this is ending the month of November, our inflation rate was at 2.75%. This has actually gone up since October, so we went from 2.44% up to 2.75%. You'll also notice over here that they like to see an inflation rate of 2%. So we really haven't seen that. Let's go back 3 years. 5 years. I can't go back further than that, but you can see the last time we had that was between 2020 and 2021 when there were a lot of regulations going on. At the peak, we were at over 9% inflation rate in June 2022 when we started seeing those interest rates climb. However, we have been trending downward since then with a slight increase from the last few months. Now, as far as mortgage interest rates go, this is on the Freddie Mac's website. It's ending averages for the week of December 26. Our average 30-year mortgage rate was at 6.85%. That is an increase, but for the most part, over the last year, we've been between 6.5% and 7% as far as those mortgage interest rates go. We did peak above 7% back in May, and then we did dip down to almost 6% in September. Now, I wanted to show you where it is, where it has been the last year, before I show you what the forecasts are from Fannie Mae, MBA, and Wells Fargo. You can see some of them show us going up end of quarter 4, which is what we did, and then going into 2025, they show us gradually going down, and we are seeing that federal funds rate gradually go down recently. However, we are still within the 6 to 6.5% range for 2025. Now, I wanted to just give you a general idea of where home prices might be headed, where mortgage interest rates might be headed, to help you decide if this is the right time for you to buy or sell. The housing market has been moving slower than it did for a few years. However, it is still moving. happening. People are still selling homes. People are still buying homes. The home prices are higher. It is more expensive to purchase a home. So I'm not telling anybody to run out, buy a home, and that it's the right time for you. I will always recommend that you look at your finances. You meet with a lender, you save that down payment, you figure out your expenses, and then see if it's the right time for you to buy. If you're unsure, give me a call, reach out. I'm happy to go through that with you and help you create a plan. Same thing if you are considering selling. Let's take a look at the comps in your neighborhood. Let's see how much equity you have. How long do we expect your home to sell? What do we need to do to get it to sell? I'm giving you a general overview of what these two markets look like, what we could potentially expect in the future. However, every home is different, every situation is different, and we'll want to take a look at yours individually. Remember, my name is Elizabeth Prisbrey. I'm with Stratum Real Estate Group. If you are looking to buy or sell here in Cedar City, St. George, or really anywhere in southern Utah, I would love to help you out with that. Please feel free to call, text, or email anytime. Remember that contact information is down below in the description, and I promise you I will respond. All right, until next time, have a wonderful day.